All right. 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 Time to go live, guys. And here we go. I think as far as my screen, hey, where's my screen? Screen. All right. Yeah, full screen. I think this one is easier. Okay. I guess not. Okay, I think it's time, and here we go. Boom, we're live now. Let's start, guys. Let's start, and here we go. And welcome, everyone. There's a new day, new opportunities that we are going to find together. This is the War Room 1985. And let me just check this because I still need to get a little bit more techie with this one. Let me see if I can move to the next page, next slide. Oh my God, there you are. Beautiful. War Room 1985. And today we're just going to talk as usual. We're going to go and cover everything in the wonderful, wonderful universe of Forex, FX, G10 currencies. And mainly, I'm going to take just a look at what is happening with the US pairs. If you want to take a look at crosses, usually I do dive in looking at euro versus the Japanese yen, also the pound dollar versus Japanese yen, and of course the dollar versus the Japanese yen. Mainly because right now we had yesterday Pfizer's news and how everything seems to be very close. According to them, remember, there's always a PR, some kind of news that filters or leaks in the media. They said there's a 90% effective. Question is what happens with the other 10%. So that's what we're going to work on today. I want to make sure that we're live on Twitter, we're live on Facebook, and also we're live on YouTube. So it's a new day. We continue with our series this week. Well, what happens? What's next? What's next for all of us after we know we have that big win from Joe Biden? Not a big win, but actually he took over the White House. We still need to see exactly if the government will be divided. Remember, the U.S. thrive every time it's divided. So if we have Democrats in power, oh, what a snoozer. And then you have a Senate that is divided, and Congress, I think it's good if the Dems have it. So there's always this balance between powers, and that's what we want. Let's take a look exactly. Let's jump directly on what is happening on MetaTrader 4. I'm just going to take a look at what's happening. Remember that everything you see is just for educational purposes only. It means I know you're probably looking to know how to learn a technique or something that will give you that edge in trading. Not only we're going to talk about Forex, also I'm going to cover US equities, and we're going to talk about options in those equities in US markets. So let's take a look. We're looking at now at H4. It's a basic methodology, nothing fancy, nothing that you have to say, wow, the holy grail. That thing doesn't exist. So we're just going to look into what may not happen. The way it looks to me right now, I made a mistake. I went short when actually following this, I needed to actually start buying at 131.53. Continuation so far, it did about 43 pips to the upside. Nevertheless, if we take a look at what's happening on the front of data, the data so far, unemployment rate in the U.S. came around the same as expected. A little bit higher compared to the previous 4.5. I thought in a way, and this is the issue when you're trading, you're thinking, you thought you shouldn't be adding your subjective views. It's about just looking at the data, looking at how price is behaving. The data can say something, but the price is telling you a different story. The story is, if you see, the story is right now, we are buying a pound dollar. We're buying pound dollar. And I will look, at least if if this continues, I'm looking at 132.08. That's the next level in the H4 methodology based on an 85 pip rotation. So every single range that you see, let me change the color. Every single range that we see, it's about 85 pips, 85 pips, 85 pips. And I designed this, which is not fancy, but it comes to be an effective and simple breakout strategy. What I'm looking is to create levels that I can trade at any given time. But it's not only for those so-called traders, it's also for those, I will say, the single mom, anyone that it's in a difficult position right now and they want to find a way to make those extra pounds, those extra euros, those extra dollars. Now, like I said, I'm looking at continuation right now. I will say Brexit can always come and say and be something that will reverse the price action, but we don't know. So far, it will be bull here, and I'm pretty sure I'm going to get stopped out on all those trades. Of course, these are the trades that I place just as a guidance, and there are the trades that I placed on a real account. So probably I'm going to get hit on both fronts. That would be funny. Now, on the other side, let's see what is happening on a little bit of CFDs. I'm going to take a look at the NASDAQ real quick. Let's take a look at that chart. I'm just going to cover this position that I'm testing a new system. And the idea is always to define what is happening with the asset. Now, if I look at the monthly chart, NASDAQ as a thing, as a whole animal, you see the asset, you see this is a white candle, right? And it means it's bullish, okay? Dark candle, the black candle, it's bearish. And the white is bullish. Now, if I see this big bullish candle, do you think I'm going to start selling? Of course not. Every pullback, just from the perspective of looking at the big picture. Remember, you're looking at the big picture. What is happening out there? Okay, that is what we want. What is happening out there? Now, if you're looking at this, do you think I want to sell? No, I want to position myself. I want to go long. I want to take a continuation in the trend. That's what I'm looking, continuation in the trend. So therefore, I start moving to lower time frames. I see now previous support took place at the 20 exponential moving average. Sometimes it's not used that much in Europe, but it's something that helps all the time. We found support multiple times, and back in coming out of the COVID-19 crash, we have the first signal of buying opportunity with a lot less risk. So you just write it down there, a lot less risk. As soon as price breaks and start trading above, you see how it found support, and then there you go. Now, of course, there are a couple pullbacks that you have the opportunity to buy, but the Nasdaq itself was never in a bearish territory. I'm just using this at 20 exponential moving average to tell you, to guide you. This is the speed moving average that we use in the, well, now in Europe, but we used a lot of professionals that use in the US. Now, what I see now is a double support in the Nasdaq, and this will set the stage for further strength and continuation to the upside. Now, it's pretty simple to see this, and I like to think, just too much. I like to think the reason why you will keep coming back is because I will do my best to coach you to see how intuitive trading is at the end of the day. A lot of people talk about suffering and the effort. It takes a lot of effort when you don't know where you're looking, when you are on your own, when you have no benchmark to start learning or to improve your different techniques and tactics. It's about making it easier. Look, if you make £1,000 in a week, why is that bad? There are other guys making millions per week. Why couldn't you make £1,000 in trading? Now, this is not an utopia. It's something that it can be achieved if you always manage your risk, and if you came to realize how you can pick the direction of the market based on sentiment, based on small techniques, nothing fancy. Do you see that my chart it's full of indicators? Well, that's not the case. I'm just using basic strategies. Now, I have what you call it in technical analysis. You have in this level, you have the double top. Okay. Now, there is this sense of always cast. A lot of professionals want to cast doom and gloom in the U.S. economy. The U.S. economy is just fine. Before COVID-19, no indicator whatsoever was calling for a recession. Okay. Plus, remember, they have all the help they can get from the Federal Reserve. And like it or not, Nancy Pelosi and the White House with Donald Trump at the time, they came very fast with a package. Do you remember how long it took for the European Union to come up with a package to help their allies? It took a lot of time. So think about this. So nothing to say, I don't have to explain so many times how the US is based on technology. You have Amazon, you have Facebook, you have now a new player in town, Zoom Technologies, Zoom Communications, ticker symbol ZM. So for you to tell me that you believe that that's going to crash massively, you have issues. You really don't know what is happening in the US. So you have to see this as a buying opportunity. Now, what we always want to measure is how deep that can be before we buy with a certain margin of safety. Now, in that case, I'm going to switch this Fibonacci. It's a trend Fibonacci, and change it to the green color. So you can say, hey, you know what? This is where I'm looking to buy. Okay. I'm looking to buy. Now, this is the weekly, then we'll do in the daily and also on H4 on the 4-hour chart. Now, look at this. Where is the price slowing down the sell? The price is slowing down the sell. Okay. Up around the 50% of Fibonacci, 11,671 points for this index, and now it's reversing. I will be a buyer. I want to buy as long as the price stays somewhere around 11,500 points. That's what I'm looking at. It doesn't mean that you have to buy right away. It means that first, you need to have a sense that it can actually move much lower easily. There's nothing wrong with that. But as long as the price of the Nasdaq stays above 11,500 points, I want to be a buyer. Let me switch that color because it's green. Okay, there. I want to be a buyer. 11,500 points. I want to be a buyer. That's what I want to be. I want to be in that position. I want to keep buying the Nasdaq. So that's exactly what I'm going to do as a guidance. I'm looking at that. It's already reversing. I already have one position. we're trading the CFDs. We're not trading, I'm not actually exposing myself to futures. They're totally different. In Europe, the vast majority of retail traders, they trade what is called the CFD, contract for differences. So that means you're not really having access to US markets. Your provider, your Forex broker, will probably be giving you access to a synthetic, and that's fine because you just want to trade. You want someone to provide you with liquidity. So we're gonna just go with 4 lots. That's a lot. For you, probably you want to go with 0.5. Take a look. Let me just take that one out. You probably want to trade 0.5. Let's see how much that one is. Let me just take this one out so we can see exactly what we have. It's going to start closing positions. That's fine. So let's take a look at the idea is exactly how much money this will be for you. So if you're buying there and let's say you want to go all the way to, it's a bit too high. I probably have to cut it down for the sake of the example. Let's take a look, 0.10, that's probably accurate. Okay. So 0.10 on the CFDs will give you, well, that's a little bit better. It's still a lot of money. Still, we're talking about the risk. Probably it's about 3,000 pounds, close to $3,000. That would be about what, $3,400 or an exchange. And potentially you're looking to go at least to the double top. Okay. That's where you're heading. That's your first target. That must be your first target. So you're looking at a potential return about 4,450 pounds. And you will hear me talking a lot about money because more than, I mean, I will express myself guiding you to see, you see points and everything, and that's fine. And we'll talk about pips, but what I want you to internalize, I want you to feel, I want you to get to know the numbers, the figures, the pound, the euros, the dollars that you can potentially make. Of course, we're going to always talk about the risk. Now, see this, the risk always, it's set easily. You just have to drag this and it will give you the information about how much you potentially may be losing if it goes against you. That's the first thing that you have to set. Let me see, I can have it again. There you go, 2,446. Okay, so that's what you have there. And then you're targeting this upside. Pretty simple, nothing fancy. It doesn't have to be complex, all right? Now, after that, what we can see is that there's more strength coming into US markets. Where's the FTSE? Where is the EBEX? Now, everyone was yesterday celebrating that the EBEX was plus 6-7%, but that was just one day. That was just one day. The bulk of the action, you will find the bulk of the action in US markets. That's where is the action happening. So if I'm looking at this will be potentially the first trade. And then I will look at the continuation of this range, the entire range. And the way we do that, it's simple. Look at this. You go to your MT4, nothing fancy. Just take this figure, rectangle. You measure the whole thing, the whole area. That way you see you go from 12,400, almost 12,450, all the way to 10,665 points. Okay, so that's the whole projection, is the whole area. Now, if we finally have a break of these two double tops, then we have an expansion. The price will expand, and yes, we will have a new all-time high in the NASDAQ. You should not, and you cannot be surprised by it. It's just the way things are going to be. It doesn't matter if we come up with if Pfizer come up with a vaccine. That's not going to solve it, okay? So you're just going to take the range, same range, you duplicate that, pretty simple, and then you project. This is the projection, okay? So in the next 2 to 3 months, I really have to change this. This one, okay. I think I used this one. Yeah, there you go. In the next 3 months, we will see, without doubt, we will see the NASDAQ, the tech index in the US, trading not too far from 14,330 points. That's it. It's pretty simple. This is the expansion. Now, you may want to take different trades, but this is where we have to look ourselves. We must trade in the direction of the trend. That's it. The direction of the trend. It's pretty simple, and you should not try to go against it. There will be a few opportunities. For example, we have 2 weeks here where we have a retracement about 800 points. Yeah, 800 points. Actually, the reversal started this area. It was about 1,254 points. But no one sells or buy the high. No one sells the high all the time. No one tends to buy the bottom. So that's something that we have to keep in mind. Now, also, when we have a pullback, this pullback took us from 12,473 points all the way. The bottom was about 1,800 points. So in our way to this new high, expect that we'll have a few pullbacks that will be substantial. So if we consider it will be substantial pullbacks that would allow us to then get back in the horse and get back into that position. Okay. Now I'm looking at what is happening. Let me see, make sure that we have everything on screen. Okay, perfect. That's the MT4. Let me just double check. We see everything on social media. Okay, just double check. Perfect. Now, potential upside all the way with a small position. You're looking at $18,000, 18,000 pounds, 18,000 pounds, $18,000, 18,000 euros potential upside with a small position. You can always reduce this and base that on your equity. What is the equity that you have in your account? So always make sure you're adjusting your account. Now, the vast majority of retail traders, they don't trade this way. So we need to remove all this and look for little chunks in how you can approach this as a retail traders. In the long term, always, it's easier for you to follow the trend, but we know that's not the reality of the retail market. So I need to go and move to lower time frames. In lower time frame, we're looking at the daily chart. We have these trend Fibonacci on the daily chart. Now, right now, your risk will be at least, you will have a risk about 336 points in the NASDAQ. The way you do this, I will prefer, let's take a look at best practices. I'm going to bring the market watch. I have the NASDAQ, and what I like to do all the time is to divide my risk, okay? So if your broker allows you, to do that, they reduce from 0.1 to 0.05. And this will be position A. There you go. Okay. Now, I'm going to buy. It's just an example for you to follow. And as it is, you can see how this daily candle, now, after being red, it was red, price was pushing lower. Okay. Now it seems it's turning bullish. It's changing. Now it's reversing from the 20 exponential moving average that is providing. This exponential moving average it's serving as support, but it's one of those technical signs, evidence that this may be a point of reversal to the upside. Okay, it's just one signal that we may have a point of reversal, and then our first target will be 12,400 points, and then continuation applying trend Fibonacci. Now, the second idea you need to see is the 50% Fibonacci. Now, when you're looking at trend Fibonacci, there are two levels that you need to pay attention: 38.2 and 61.8. 1 and 2. That's it. Those are the two levels that you need to pay attention. Those are the key levels. Now, we don't know when it's going to reverse. Nobody knows. Okay. So what we want to do is to pay attention to how price is behaving. Now, so far we have one confirmation. It came all the way, price came all the way and found support on this moving average. That's one. And then to the right, hey, look at it. The 50% of Fibonacci, of trend Fibonacci. So I have now two technical pieces of evidence to support buying more. I'm just not going to be blind about it. I also need to consider that there is risk. Hey, there is risk. Hey, look at it. That's the risk. So if I take this position with this, you see it, it's 0.05. Okay. If I take it with that lot size, I am risking so far with this daily, with the daily chart and applied trend Fibonacci, roughly 1,800 pounds. That's my risk. Now, where do I exit? How do I know where to take profits? That's one of the many questions you get all the time. Now, if you're new to trading and you're applying trend Fibonacci, you're following this simple and effective methodology, all you have to do is to target the 0.0% of Fibonacci. That's it. It's not complicated. It's a must for you to exit either one trade or, I don't like to say this, but you need to exit with a partial profit. This is what we know. We need to reduce uncertainty, and you need to bring certainty to your account, to your money. So you do that by understanding where to place your risk, define your risk right there, and take profit. Simple. That's it. It's just a mathematical exercise. If you're taking risk, you need to take profits. Now, there's a school, it happens in America, it happens in Europe, especially in Spain, that they say, well, we use tight stops and problem solve. No, using tight stops doesn't make any sense. You use a tight stop if you have a mathematical edge, but sometimes it requires you to position yourself accordingly to the investment. That's what it is. There's no evidence, there's no research paper out there that will tell you that if you use a tight stop, things will be better for you in trading and investing. That's not true. It's simple. It's not a fact. There's no evidence, scientific evidence that it works that way. What it does for you very well is to maximize every single opportunity in the direction of the trend. That's what it is. For example, I didn't pick correctly the direction in the trend when it comes to H4. Why? Look at this. We're going back and forth charts, and now I'm looking at the Great British Pound versus the US dollar. We'll be back to the Nasdaq in a moment. What happened here? I failed to understand how price, just following my own methodology, stood right there above the 131.53. That was my buying opportunity. Also, you have to correct this. We are in a risk-on environment. That means we're buying risky assets. The pound versus the US dollar, who is the one that we buy when we have risk on, when investors are taking risk? We buy GBP. It's our preferred currency, not the US dollar, okay? So the trade here was to buy not too far from 131.53, probably have your stop loss somewhere there, okay? And then you were targeting, at least from that perspective, from this point, you were targeting either 132.24, which already happened, and exit at the next rotation level. That was about it. Pretty simple. I didn't do it. I paid for it. Now I had my stop loss, so I still have a chance to recover and see what is happening out there, what is available for me. Okay. Let's take a look what is happening in the market watch. The low of the day, 131.54 for the Great British Pound versus the US dollar. And now we're trading above the 132. We're trading above the 132, the psychological level. This is crucial. It means that if I look at this, I still have an opportunity to move all the way to retest this bearish trend line, external bearish trend line. And this is a big opportunity for me. So I will say if I'm buying today, I still have about 97 pips on the table if I want to go long the pound. This is exactly what I'm about to do. I'm just going to buy with one lot because I already lost potentially a lot that I shouldn't. I always like to take notes. It's a good practice. It's a positive practice for those of you that you're new to trading. Journal. Even also as a business. What do you think there is the books? When you have a business, you have the books, right? That's the same story. The story is about writing down what comes in and what comes out. When it comes to trading, what I like to do is just to understand if I'm a buyer, what was the low of the day? How far I was from the low of the day? That gives me a guidance to practice. I have a sense of what I'm doing. So I'm just going to add this. And now the risk is the issue. because I'm buying not too far from the top of that rotation in H4. I need to set my risk. I will use at least, I'm willing to take 460 pounds on this one. I'm updating my risk. And then what I'm looking is, based on the H4 rotation, I'm just going to go all the way to count about 85 pips, the max target, before I actually exit. There we go. So we'll talk about that a little bit more. And I have my trade on the pound. Now I see that I have a little bit of dollar Canadian. I'm going to close a few positions and focus only on two currencies. That will be risk on currencies. So your goal every day is to find ways to define fast what is the sentiment, what is the sentiment of the day. Looking at this, there's a little bit of pullback in the dollar versus the Japanese yen. Equities are trading a little bit lower, related to what happened yesterday. But then pound also, it's trading higher, so that means that there's a little bit of still of risk on out there. And investors, their risk appetite is actually decent. They still want to buy a little bit more of risk. So that tells me as well that there's a potential that it will be a continuation in equities, and that will spark new buys at the current price of the dollar versus the Japanese yen. So also, I will look to increase my position a little bit more there. I will like to take more risk. I like to take risk, and I'm going to bring to my MetaTrader 4 charts. You have there the dollar versus the Japanese yen. I'm looking at now. This is potentially what I will prefer to look at. In this currency, what I see is, we have a long-term bearish trend line. You can use this potentially all the way from March, from the beginning of March. There's no secret what happened in March. If you put it this way, price is right there, flirting. It's flirting with the long-term bearish trend line in 2020. This is the dollar versus the Japanese yen. All I have to do and all I have to think is this: after yesterday push that is coming from a big liquidity level back to this, look at this candle, the daily candle on February 12th of this year. There's a big area of liquidity. Look at this level, all that massive liquidity, that's why the price moved lower to close this liquidity. It did it. Now it has everything. It have all the pieces ready to push higher. So now we expect, of course, it's going to flirt, it's going to trick you, it's going to make you think that is a continuation. It's going to make you think there is a bearish continuation. After yesterday's massive recovery, you think, well, oh, this is just going to push lower. No, it's just flirting. It's just trying to trick you. The market it needs liquidity to keep moving higher. So therefore, it's going to sell off a little bit. Now, if I look at just basics, you will see 104.72, 104 with 72. That will be a point where it has potential to a continuation. Now, if I take trend Fibonacci and I just move it up this way from this low to the end of what was yesterday, about 246 pips to the upside for the dollar versus the Japanese yen. This is easy. This is easy to see. Easier this way to see. Look at what's happening. Okay, you have this potential retracement. Why not? It can easily move lower all the way back to 61.8. That would be 104.11. Now, what it means that I still want to be a buyer. I still want, let me change the color. We talk about this. Let me change the color. When we're looking to buy, we're going to use green for trend Fibonacci. All right. Now, what we'll see here is, okay. So here comes later. So what I see is potentially, don't be surprised. Do not be surprised. Hey, this can easily move to 61.8% and still will be a buy for the dollar versus the Japanese yen. That's what we're looking at. So based on this idea, all I want to do then is I'm just going to take this And I'm going to add, but the way I'm going to add to my position is having a notion. I know I can actually move lower. So yeah, I'm just going to take the risk. So far, the low of the day, I always like to take notes. Market watch. Okay, the low of the day, 104.81. So I'm going to take my notes, 104.81.5. And there you go. Okay, perfect. And then I'm just going to measure my risk. Remember, each one of you, you have to measure your risk. You have to just decide what exactly is going to happen. How much are you willing? How much you're comfortable with allocating to the position. Some of you are going to trade 0.1. That's one mini lot. Some of you will trade 0.05. That's micro lots. Some of you will trade 5 lots, 5 standard lots. It all depends how where is your comfort zone as far as risk. You always have to measure the risk that is available in your account, okay? So you take that, and now we're just going to go with the projection. How do we project this one? Same as a trend Fibonacci. Always remember, you're looking at the range. What is the range? If I look at this, I'm just going to take, this is the full range. Yesterday, it moved from 103.16 all the way to 250. That's 250 pips, 250 pips in one single direction. That's a lot for a pair, especially a pair like the dollar versus the Japanese yen. When was the last time you did something like that, something similar? Look at this. It was back in August and moved about 190 pips in one single candle. I'm counting from the low to the high. And then there's the open. Well, the open, it moved lower, trick everyone thinking that we'll have a continuation, a bearish continuation. It didn't. That's what the price did. It didn't. And then it reversed. It trapped liquidity and then it moved up. That's what it did. Okay. So now the same process has to happen if we want to see the pound, the dollar yen moving higher. That's what it has to do. It's pretty simple. The market will attract liquidity. And if that's the case, at any given time, what the market will do in this currency pair, dollar versus Japanese yen, it basically is just going to play with you. And then first target will be going back to 105.65, which already was the high yesterday and was the high, somewhere the high between October, probably October 16 or October 17 last month. And then the price, once there's a structure, there's a full bar, full candle above the 0.0% Fibonacci, hey, it's going to move higher. Now, we want to be ready to take advantage of this opportunity. We want to do that, okay? So what I want to do also, let me just close this trade and do it again, because I want to add to myself a little bit of information. Now, this is position B, and I'm taking this position with a 26 pips difference from the previous trade, okay? And the low so far, same story, no new low so far in the day, 104.81.5. There you go. Okay, so I have my risk, I have everything. Need to set my stop loss. I'll look for this somewhere around it. Okay, potentially. And with this trade, what I want to do is make sure I look for the full scope of how far the currency may go. If I'm conservative, I will say we'll go back to that level, 106.52. Now, pay attention. This is liquidity back on September 3 and September 4, almost 2 months ago. So it's not a surprise, but I will prefer to target this liquidity, 106.90, and then the final liquidity all the way up to between 107.24 and 107.50. That's the liquidity we have, okay? So if that's the case, I will be looking at some support at 38.2%, and that will give me potentially the target I'm looking, the final target I'm looking, that would be 107.10. That will be my final target buying this currency based on the expectation that equity markets will keep just moving higher. In this case, for example, it's exactly the same I'm about to do with trend Fibonacci apply to the NASDAQ. Okay, that's the full range recovery from the last week in October all the way to now November. And there you go. That will be the projection, at least on the daily. So in the daily, we're looking the price action to take us all the way up to a new high in the NASDAQ. And we're talking about 13,111 points. That's pretty much about it. So that's the idea so far. That's what I have for you guys today. Now, I would like to take a look at what's happening on the news side. Let me see if we just can take a look what is happening. 1 second. Let me just prepare everything. Let me see where's Bloomberg. Take a look at what's Bloomberg saying. We can also check the Guardian, see what's the Guardian talking about now. It's just starting to move. Let's see how far we can take the pound dollar today. And here we come with Bloomberg. Let me just get out of the way. Okay, so you guys supposed to see. Okay, no. So I do this, and then I share my screen. Okay, perfect. So let's see what's happening on the news sites, on the new front. What is Bloomberg offering today? The same story. Pfizer, Eli Lilly, I think it's Lilly, something like that. Breakthroughs provide hope for ending pandemic. And that's what it is. Hopes, that's what they're offering, hopes. Let me see if it changes the screen. Okay, just make sure we're on the same page on Twitter and Facebook Live. Okay, perfect. Yeah, the headlines are not going to be that much. They're not going to change that much unless there's something happening, some serious change in what the outcome of the U.S. elections. Otherwise, we're just going to keep riding this wave up based on everything that is coming from pharmaceuticals. Pfizer, this one. What is exactly they're saying now? See what they have. All right. Okay, perfect. Okay, there's a little bit of a Chinese trial. They're talking about Sinovac Biotech. Yeah, and basically, yeah, the idea is this. It's about understanding for governments to understand exactly what is happening with the vaccines. If you rush yourself, you never know what will be the long-term side effects or potential side effects of the vaccines, and that's what happened apparently with Sinovac Biotech in Brazil, a Chinese company. So there's here a chart that our colleagues in Bloomberg, the source is Duke Global Health Innovation Center. Okay, so according to this, these are the sizes, the countries, and who from they're taking the orders. Taking the order for Pfizer and Moderna, they're taking the orders. And probably this is something I want to take a look at, what Moderna is doing. I'm going to take a look at the trading view and see. We're going to take a look at the ticker symbol a little bit later. There's a few companies I'm working on, but I think Moderna, we still have the potential to go with a buy there. I think there's a target of $90. And this can be just the beginning of a long-term opportunity for us in this stock trading in the US. I'm looking at the weekly chart. Yeah, there you go. There's a massive volume at 63. It retraced all the way to 50. Now it's back. Went all the way back to $81. That right there for Moderna was about what, 50% in a couple of weeks? 1, 2, 3, 4, 5, 6 weeks. Yeah, that's what it is. Yeah, it was, yeah, almost 50% in a couple of weeks. And you can always use, when it comes to following, well, using your charts in with trading view, then what you want to do is you want to look at the volume profile. That's the histogram I have to my right. And basically what it is, volume profile, I want you to think, okay? Volume profile is just a map. It's just a map that allows you to identify where investors accept paying XYZ price for the stock. Again, investors are willing to pay for that stock. They were willing to pay $50. We know that. They were willing to pay massively, $47 for the stock. But now, look where the stock is trading. It's trading up here. There's a volume profile. There's huge rotation from $58 to $69. And look at this big long line of volume. The market is telling you that multiple investors are willing to pay a lot of money. And that a lot of money is $64 per share for this company, for Moderna. So applying volume profile, which I think volume profile, honestly, is the indicator of this decade, 2020 to 2030. Doesn't matter who you talk to. You can talk about all the Elliott waves you want. You can talk about everything you want and all the different variances of volume. Because, for example, I use Hawkeye Traders. Kudos to Anthony Speciale Jr. and also Randy Lindsay from that company in the US. Very nice. Also part of Market Traders Daily. Big old man, Dustin Allen Paz and company. So it's very effective. I mean, we know that there's absolutely a lot of volume back in July. So it's not a surprise how price slowed down. The selling slowed down around $57 per share. So as soon as you have volume profile, you can find yourself mapping and having a better idea where are investors positioned. Where are they positioned? And as soon as you have that idea, then it's easy for you, very easy for you to just start adding to the position. So looking at the headlines and looking at this article from Bloomberg, I can say, okay, if this is the size of the orders, you have United States, you have Canada, you have United Kingdom, they don't have anything from Moderna, but you have Japan ordering, Switzerland also is ordering from Moderna. And I look at the stock right now trading at $77, moving up in about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's about 2 months and 2 weeks. It's moving up again about 50%. That's bullish. That's bullish. And also, if you apply volume profile, remember, they're not my friends, but I cannot say no to something that it's very good to work with. Volume profile is an indicator that you have to pay. It's come with part of the subscription. If you go with TradingView, it's about what, $29.95, 39 pounds per month. And it helps you, it guides you. Because if I see the price, let me just zoom in. If I see the price coming to the 20, now remember, in this, when you look at my screen and TradingView, the orange moving average, that's a 20 exponential, okay? It's very popular in the US. Now, I see price coming, finding support at the 20. And I see also to the right, the histogram, the volume activity on the weekly chart. Then I know there is massive opportunities for me to buy. And if I do that at the time, what was my risk? Let me just take this out. Okay. If I want to look and close the cycle, okay, where is my risk? I take my tool to the left, my long position. Let's say I buy very close to the moving average. There you go. I'm taking about, if I use the previous low, That's about what, 20% risk to 40%. That's it. That gives me close to a 2-to-1 risk reward ratio. Remember, for you to be successful in trading and investing, same as in any business, if you have, I don't know, if you decide to have a gas station, if you decide to have, for God's sake, a restaurant in the UK, in Manchester, I don't know, in Edinburgh, anywhere is the same. In Japan, from Japan to Argentina, if you want to have a business, you need to have books. You need to account for money coming in, money coming out. It's the same in trading. Here, what you have to do is simple. You have to manage risk, and that's RRR, risk reward ratio. That's about it. Nothing else. Nothing else. Stop fantasizing with, oh, you're going to be rich. Take small hits. One hit. Like in baseball. What is the goal as a baller? If you're at the bat, hey, you have to make it first. That's it. So not all the time you're going to find trades that are going to be crazy money, 100%, or like last week, APVO, APVO Therapeutics, crazy money. It went from $8 to $70. But you need to have methodologies to do that. Now, if I'm only reading Bloomberg and I'm trying to make sense of what they're saying in this article, if I look at this chart, it means that the future is still bright for Moderna, ticker symbol MRNA, because there are companies actively ordering their product. This is not just a Tesla that, yeah, you have a few orders, but the company is still not profitable. There's a ton of money invested in Moderna. Pfizer, why wouldn't go with Pfizer? Hey, pretty simple. Pfizer is a white elephant. It's a very strong company, very mature company. I don't know how much money I can make. I can probably make 15% safe, 15. But I want to squeeze more. So I know Moderna, they still have room to grow. Now, my first trade, if I take Moderna, will be a 20% risk, tackle the cycle. There's the cycle, market cycle. That's where liquidity is. So before it keeps going to $120 per share, guess what? It has to go to the previous high. That is a $95 per share. That's your first target. Pretty simple. Nothing too complicated to see. The question is how high this one may go. As usual, we're going to guide ourselves with simple strategies. Do you see my charts? Do you see anything crazy there? No, it's very simple. I love it. Minimalist. So I'm just going to go and call my good friend and your friend Fibonacci. And we're going to go with a Fibonacci, trend Fibonacci in the direction of the trend. Now, there's a little bit of coloring. I don't want you to get don't get confused. Just follow me. Okay? Follow me. I'm taking it in a long-term perspective from the low back in August of last year, okay, August 2019, to the high of this year before any pullback. That's $87.92. You can see the 0.0% Fibonacci, okay? Simple. Now, what do I want to do? What do I want to do? I want to make sure, just double checking that everyone is, that I have everything on screen as I need it. Perfect. Now, what do I want to do? I want to understand the range. Again, go back to Trading View, use price range, and here we go. So that's about $76.60, okay? That range is equal to $76.60. That's it. Nothing more, okay? Pretty simple. Now, we need to go with the projection, okay? Okay, just talking to my sis. Yeah. Okay, just a second, guys. Just talking to Larry as well. Perfect. So the way we're going to do is now I have $76 and I need to find a projection. Where did the price stop moving lower? Right there. Look at it. 50%. I'm not a fan though, but doesn't matter. That's where it reversed. So we can say between 50% Fibonacci and the 38.2% the Fibonacci. So I will be conservative and I will say 50, not 38, 50. And from 50, I'm going to project to the upside, roughly $76. Okay, $76. And that will give me an idea how far this stock will make it. I will just count 80 because as soon as it keeps going up, everyone's going to start buying. So I can push it a little bit higher. So I can see based on this information, based on previous information, let me just take this one out, move it lower. Okay, based on this information, based on the previous range, from the low sometime back in August 2019, again, all the way to this first high, $86.90. Then we have a pullback. Then you see how price tried, but it never had a full body. It never had a full body above the 0.0% Fibonacci. Okay. So if that's the case, it means to me, technically speaking, that the Fibonacci is not activated. So there's still value. There's still money that we can squeeze, we can make out of Moderna. Ticker symbol, MRNA. There is value. There's opportunity for you to make money in this stock. If you're in the UK, if you're in Europe, you definitely need to actually get put your hands on a trading account, investing account. You can look for Saxo Bank in Denmark, or you can look for Interactive Brokers in Europe. Any broker that will give you access to US markets. Now, the last time this push was about 700% to the upside for Moderna. Okay. Now, this time the company's already, a lot of people know about it. There's not so much that we can squeeze, but still something doable. Let's take a look. If that's the case, if this is what I'm looking at, I would like to place my risk and potentially trade Moderna. Okay. So if that's the case, and I know I'm looking all the way to $130 at least, I'm going to just remove all the drawings, basic drawings that I used to give me an idea where to move myself, targeting potential value for my money. I'm going to pick long position. I'm going to start opening it. And the way I trade, especially when I'm managing portfolios, I just go with a 35 max, 35% risk. That's my measure. Now, sometimes you don't have to use it all. I'm going to use it this time, okay? Actually, I'm just going to use it to the previous low. I'm going to use about 30.50% risk. And then I'm going to push this to the upside past the previous high, because of course, if you want to see this one, if we want to see Moderna trading at $130 per share, what it has to happen? It has to break the previous high. And that's also another bullish sign for when it comes to buying assets. And about 130, there you go. So I'm looking at a 30.5% risk, looking to make 66% to the upside. What that tells me, okay, what that tells me, I have a risk reward ratio. Again, it's based on the function. Trading and investing is a function of managing risk expectations. RRR. Again, RRR. Repeat, RRR. Risk reward ratio. And this is not anything different from running a gas station, working at a coffee shop. You have to measure what comes in and what comes out. If you have a lot of money, let's say you have a coffee shop and you're making 5,000 pounds per day, but guess what? Every day you're also spending 5,000 pounds. I got to let you know something. You're not making money. I repeat, Houston, you are not making money. It's the same thing in trading. I need you to connect the dots, and make sure you understand that trading is not different from your day-to-day life. It's an exercise of measuring risk. If you manage it, you will be successful. If you can't, it's the same story in your life. You're going nowhere, my friend. Mi amigos, you're going nowhere. And I'm not saying this for you to be offended, all right? And I'm saying this for you to be offended. I'm just saying this for you to have a sense of understanding that it's not different out there, okay? It's not different out there. It's just the idea of understanding if you make it in life, you can make it in trading. It's just a concept of managing risk, your risk, okay? So let's continue, okay? So I think that's the case for Moderna. I'm going to post this on different channels so we all have it, and you can look at potentially an opportunity. Remember, at any given time, you are responsible for your trading and investment decisions. I'm just guiding you, and use this information from Bloomberg.com. What a great site, right? Of course, remember, support journalism. They are selling their monthly subscriptions around, what, £10? And then it becomes tricky. You have to pay a little bit more. But if you are really serious, if you are really committed to be informed, to know exactly what is next for you, how to trade the markets, and get top-notch information, top-of-the-line information when it comes to trading and investments. Well, see what I did. I just read a little bit of the article, see the chart, and understood there was an opportunity in Moderna. So also I'm going to talk to my clients today about taking a position in the company, and also looking at potentially, right now I'm going to do that. I'm going to not just give you a little bit. Let me over deliver. Let me guide you better. Let me coach you into different asset classes and how you can diversify or find the asset class that is the best. It's the most suitable for you. Okay. Just going to post this one. Let's take a look at this one. Okay. MRN. I think they're on Twitter. No? I think this is, yeah, that's the one. Okay. Okay. Just send a quick message to the rest of my friends. See who else is out there. Volume profile. Okay. And that's out there. Perfect. Very good. Okay, so we got that out of the way. Now let me just double check, make sure. Yeah, I think everything is there. It's online. Okay. So that's the one. Let me just send it to other social medias, channels, LinkedIn, everything. No one can say we don't share positive news, good probabilities. Just going back to what's happening with the pound dollar again, going back to FX, G10. We'll look at the pound dollar. In effect, it's back trading. We entered at 132.07, back at 132.19. There's about 12 pips in profits. Like I said, I'm just going to go with the flow, go with risk on. The second position that has an advantage of 26 pips after the retracement from yesterday. Looking at the dollar versus Japanese yen, hey, look, I'm taking risk, okay? I'm betting on a continuation in U.S. equity markets, and that will spread all over. It happened yesterday with the IBEX 35. We noted how it went up like 35. I won't know, actually, saturating 7%. So that's a good thing. That's a really good thing. Now, if I look at the NASDAQ, what is the NASDAQ doing? I think I took a position. Now it's not moving very well still. Apparently still retracing, so we'll see what happens there. Well, how we take this one. I'm going to close this position. Is doing absolutely nothing. And I think what I want to do also is I want to take a position real quick before I continue back to equities and look for options in the US. I'm going to take a look at what is the euro, the cross euro versus Japanese yen. We have EUR, JPY. And in this case, again, just judging following trend Fibonacci. I'm going to take a look at this. It's a bullish one, so I use the green green color. Okay. The price is its finest support, found support at 23.6% Fibonacci. The reason why is, remember, when you use the full range projection, okay, see that you have couple bodies, couple candles above zero. That means the Fibonacci, the trend Fibonacci, the projection is activated, okay? It's activated. And there we go. And if that's the case, let's say, let's be conservative, okay? 50%. Then we still have room to go all the way up to 129.33. From the current level, we still have on the table another 480 pips. Now, this is, again, because equity markets, let me just repeat it, equity markets, okay? Equities are moving up, okay? That's the only reason why I am considering buying this cross. It's a fundamental situation. It's what is happening. Is the groundwork that you need to have. What is the sentiment right now? The sentiment, and we're in November. Remember, there's a little bit of the Santa Claus trade, the Santa Claus rally as well. So what I'm looking now is to say, hey, I want to buy there. Okay, and I'm looking to at least go back to close this previous cycle. There's liquidity at this level. Okay, so that's what I want to do. I want to target that cycle. I want to target that level, and that's that will be at, for the euro versus Japanese yen, that would be at 126.90. So let me just do it manually. I'm just going to go and 126.90. That's my take profit there, and that probably, well, that's an absurd amount of money, but I'm just training myself to get used to, get my eyes used to big amount of money. When you're managing using MAMs and PAMs, you need to manage a lot of XYZ number of accounts, and I have to make sure the money is properly distributed among of all those accounts. So I need to train myself as well. Coming back to my trade, this trade, I'm looking at to close the cycle, that previous cycle, and then potentially close the end of trend Fibonacci. Trend Fibonacci. Okay, that's what I'm looking at this case. That will be it on the space of currencies. Just one more time, let me just see what's happening on H4, our basic methodology to trade the Great British Pound versus the US dollar. What is my trade, my charts? What is the US dollar index doing today? Huh, still trading above. It's doing well. It's trying to survive. That's positive. It's positive. Where's the index? Yeah, it's retracing a little bit. It's completed the upper path of the rotation. It's gold. Okay, I think right there. No, Swiss franc. Here we are, and as you can see, it's here we are in H4. I'm not too far from the upper band. 132.34 will be our next stop. That won't be that much, but definitely we're looking at potentially coming to the next level, all the way to 133.18. That's H4 methodology. Our max stop loss will be 85 pips at all time. We trade three different sizes when it comes to three different sizes when it comes to lot sizes. We trade 0.25, we trade half a lot, and we trade one standard. So the max loss that you can have at all time in pips is 85. Now in money, it will be based on this. It will give you an idea, but on any single trade that you go with this, because we only trade one currency, it's the Great British Pound versus the US dollar, then your max loss can only be 850 pounds. You cannot lose more than that because it's not part of our methodology. That's when you have a methodology and you know exactly what will happen. It's easier. It becomes easier for you, more intuitive to trade Forex or to trade any markets because you have an understanding of the tolerance of risk. How much are you willing to lose? How much, following this methodology, you can lose? Now, if that's something that changes all the time with the way you trade, then you don't have a methodology. You have a trading strategy. You have some sort of like tactic that you use, but it's not consistent in defining the parameters, the values of your practice, of how you trade, and that can always alter the results. Sometimes it can be really, really good. Sometimes it will be a little bit tricky to define where are you. And at all time, following H4 and understanding the 85 pips rotation, 85 pips, 85 pips, 85 pips, 85 pips, because the markets have memory, then it becomes way easier for you to approach trading. You won't be so scared because we know it's a function of you thinking that you're going to lose money. And hey, listen, we all hate to lose money, right? We all hate to lose money. So there's no reason for you to be happy if you lose money. So of course you are afraid to lose money. That's not something that you want. I don't want anyone to lose money. But if you are following just a strategy, sometimes you're going to lack the understanding of what will happen or what you need to happen in order to make money. Okay, so enough said with H4. Great British Pound still looking at risk on. Remember, risk on for the day. We are trading risk. Risk is on the streets, and we are looking to buy it. Final exit for us today, if it moves correctly, we're looking to exit at 133.18. Anything above 132.50, it will be appreciated for the Great British Pound. Now, let's just finish. Let's go and find closure for today's session. And I'm going to look for options. Call options, call opportunities when we talk about Moderna. That's what I'm looking to do here to close today's session. Now, I'm looking at Moderna. I know there's an opportunity for us to look at 130 per share next year into 2021. So what I will say, I was looking to actually place this, but I'm just going to let go. Okay. What I want to do is go to all NASDAQ. This is the site that I use for picking call options. Okay. I will need to use the loot. So guys, boys and girls, I'm going to leave you for a couple seconds there watching the screen. I will be right back. Okay. All right. And I'm back. Okay, I just went to the toilet. Okay, I'm back. So just to go with the options in the US, remember also you need to have a provider. I think IG in London, they also offer access to US markets, but I'm not sure if you're allowed to buy options directly with them, or you need to call their desk. I just figured that out. So we go to All NASDAQ. This is the site I use to study. It's free. Remember, it's free to study my options. This is the NASDAQ. Yeah, it's actually the site for the tech index in the US. Now, I'm just going to type in the ticker symbol that I'm looking to work with, and I'm going to look for the options chain. Okay. Let me see if there's anyone connected anywhere. I think it was like one. Yeah, it's fine. Okay. So we have that. And I'm going to also place this information on the video at the end of the video. And I'm going to look at potentially, I don't think we're going to see what happened, but let me take a look at April 2021. Let's see what is available there and how much we can pay for it. So it's trading at 85. Last was $14. I think this may work. There's some action. There's some interest, open interest. Open interest means, let me just write this so you know. Okay. Open interest. That's what it is. Interest. It means there's open contracts at that value there. There's action at $70. So someone probably already made a lot of money. A lot of money. What I want to figure is what is available for me for next year. Okay. Let's see what is trading here. That's good. It's really good. Okay. So I want to look into this, and okay, someone potentially in the last 5 days made some money, but all the way 16, what happened the last 3 months was trading at $12, so not so much, but still good. What I want to do is potentially see what is the appetite above this around 120. If there's any chance there's a strike at 120. If it is, that will be positive. And we can see if I can place a trade there. Target next year. There's nothing. I don't know if there's something above 100. I have to look into that and see if I can actually get something for my money. There's nothing. Just go back. It's hard to see if there's any strike above it. Okay. Okay, so that's 70. Let me see if there's 90. I'm gonna change the number. If I can see that. Okay, 90. That's 90. The low was $9. The question is now, how do I get 100? How do I get the 100? If there's 100. Still is very, means about, you have to pay this one you have to pay about $1,245 per contract. I forgot how I get to 100. Okay. So say if I take 10, take this, take this, 120. See if it's there. No. Let me see if I add one more 0. Okay. Not either. Okay. I really have to look and see where is that 120, or if there's any chance. It has to be a 120. Okay, let's try another site. Let's try Quote Media. They do the quotes for a lot of companies in the US. Here's another site you can use at all time. Okay. And it gives you a good charting for the options. It's going to load a little bit slow. Okay, this is actually moving nicely. And they offer a lot of content, web content solutions. Okay. So Moderna, and let's figure, because it has to have, it must exist. There got to be something around 100 strike, 120. And that will be what I will be targeting. Okay. You go to the left, click on option chain. See what's moving there. All right, let's see if it's finally, okay. So I just click on this one, remove it, and then go all the way to, okay, April 26. Okay, it's April 16, 2021. All right, there you go. That's the 100 right there. There you go. Boom. Now you can see the open interest in this one. Let me just zoom in so we can see 76, 100, 80, 90. Perfect. You can see it better now. Okay, let me see. Check on social media. Okay, now there's some open interest. These are very expensive. They're paying a lot of money. So if you multiply this, I think there's about what? It's online calculator. I think someone paid in the millions. So you take 1,341 contracts, multiply that by at least $10. That's $1,000. Let's say let's have two best case and worst case scenarios. You have an idea the amount of money that is allocated in these things. Oh Jesus, this thing is taking forever. Okay. Okay, so if we have 1,341 contracts, multiply that by 20, that's $2,000 per contract. Someone, and we can have an estimated guess, an educated guess, there is $2.6 million on this one, right there. That's what it is. Now, I found there's 100. The thing is that this is the only strike. They don't have more strikes. That's it. That's 100 is the last one. So that potentially has an implied volatility at 8.6. Let's take a look at this one because this is the one we want. Okay. All right. Okay, this one went up 31%. So previously it was trading at 760. That was a good money. Yeah, that was really good. And the delta is 44 right there. So there's a 44% probability this may happen. But as it keeps coming up, also, this is a good one. There's almost $500,000 there, probably. Okay. What it did, the low was 850, so that's good. Yeah, this is the one. This is the one we're gonna trade. So I will actually place this on the screen of the video, looking at the call that I'm looking at, and this is the one I want. I want the Moderna 2021 April 16 100 call at hard to say where this thing is gonna open, but if it's open at 10, what's the bid? What is the ask? Okay. That's the thing. Okay. Oh boy. Okay. So if the ask is at 10, we still can pick $1,000 for one contract potentially. And I will be looking to double my money all the way heading to April of next year. And I'm following it 100%. I'm following the smart money. There is a ton of money allocated that there are orders waiting. Pfizer is not going to be able to cope with all the orders coming from the different countries. So Moderna will be one of the big winners in this case. Okay. So this is coming to an end, guys. Working very well so far. We want to buy risk. We want to buy risk. We want to buy the dollar versus Japanese yen. I'm betting a continuation in equity strength. Also taking euro versus Japanese yen. I'm taking a continuation, looking at trend Fibonacci on the weekly. Massive support, guys. Massive support at 23.6% after the trend Fibonacci was activated. That's what it is. Look at what it is. It was activated. It came all this way. I will say price structure, push. This is the next one. And then we have the pullbacks on the euro Japanese yen. And now we're on the verge at the beginning of the first innings of a new push higher, closing previous cycle for this currency cross and final target somewhere above here. I don't really care. I will be taking my profits around 126.90. That will be back to somewhere around closing cycles back at May of this year, probably, and all the way back to April 2019. Also on equities, on US equities, exactly what I had for you today. All of you, you saw how I used volume profile. I set my risk at 30.50%, all the way back to the low on September of this year, around 54.20 for Moderna, ticker symbol MRNA, and I'm targeting an expansion on also trend Fibonacci all the way up, targeting 130 per share. And I'm thinking that the best way for us is to play the Moderna call option. I'm bullish Moderna. I'm calling to 100 strike. I would love to have the 120. There's no 120, sadly. So we're paying about, when the market opens, paying at least $1,000 for this option, heading all the way into 2021. All right, guys, this is it for today. I want to thank you for all of you that you were present, all of you in different social medias, in different social channels. Thank you for watching as much as you did. I hope this information, this information will definitely give you the edge in the markets. And I see you guys tomorrow. We're going to come back with more H4 methodology. We're going to talk about H4. We're going to talk about currencies. We're going to talk about the NASDAQ, how to trade indexes. I'm using, in this case, the AvaTrade simulation account. I also use FX Pro. And that's it, guys. Thank you so much. And remember, I see you guys tomorrow. Until then, us.